Welcome to a special interview segment for the New York Stock Exchange. Today I'm joined by Chris Whalen, who's an author and consultant, as well as chairman of Whalen Global Advisors. Chris, thank you so much for joining me today.
Thank you very much for having me.
Well, we're here at the beginning of May, and there are plenty of headwinds when it comes to global economy as well as politics. I'm glad you're joining me today. Now, you recently came up with a book called Ford Men, and you talk about businesses. And in this book, you talk about luck versus strategy. So what would you say is most important when it comes to businesses?
I think in many respects, luck. Luck in terms of being in the right place at the right time, meeting the right people, having their support as you try and go forward. That's clearly the case with Ford. Henry Ford had two failed businesses. Ford Motor Company was number 3. And if he hadn't had capital, people, and a lot of luck, we'd be sitting here talking about Horace Dodge instead of Henry Ford. Horace Dodge was actually a shareholder of the company when it was founded. And Henry wasn't even an officer. He was just brought in because he knew something about cars. But he was so disreputable and so just kind of unusual for his time, not a conservative man, that the backers of Ford Motor Company tried to keep it quiet for a while that he was involved. It's an amazing story.
And Chris, it's really interesting. When I think about the Ford Motor Company, I think about the Model T, the vehicle, or the assembly line. So in this book, you follow 3 different Ford members, and throughout the generations, a lot happened. But can you tell us about some of the myths and misconceptions that a lot of people have when it comes to Ford Motor?
Well, the Ford Motor Company's PR department, which has featured some of the greats of public relations over the last 100 years, has wonderfully airbrushed the history. So you think that Henry Ford did everything. But in point of fact, he didn't invent the assembly line. That was his and a guy named Charles Sorensen, who ran Ford Motor Company for 40 years, a Danish engineer who basically wrote a great book taking responsibility for inventing the assembly line, by the way. James Couzens, his business partner, was the man who literally turned it from a good idea into an enterprise. Thus the subtitle of my book. Without Couzens, there would be no Ford Motor Company. And then lastly, raising wages. Henry Ford didn't raise wages. That was Jim Couzens because he was haunted by his wealth. They made so much money on Ford Motor Company in the first 12 years, which was when Couzens was involved, that he just felt that they had to raise wages.
Well, Chris, you also bring a wealth of information. You were with the Fed Reserve of New York for several decades, and you also covered the broader market as well. So with innovation comes revolution. Whenever we look at the internet or even electricity or a lot of things we take for granted, that was the result of innovation. And when we compare Tesla and Ford, the market cap of Tesla is higher than Ford. So it has been over a century since Ford Motor came onto the scene. So what do you think is going to happen in the industry?
The industry is rather peculiar because there's a lot of overcapacity. So many motor companies around the world don't make money. Tesla clearly doesn't make money. It spends other people's money, but it's been sold beautifully. Elon Musk is a great salesman, but he's coming in at the end, as you were just saying, where there's not a lot of innovation. In fact, they were thinking about making electric cars 100 years ago. Thomas Edison wanted to build an electric car, but the batteries were too big. So he said to Ford, use gasoline. It's a more compact source of energy. So the kind of innovations and inventions that occurred in that early decade of the 20th century were just enormous. Steam propulsion, gasoline engines, electric lighting. These were all transformational developments, whereas today you have incremental developments. We've had electric cars for 100 years. But Teslas are really nice. I don't think the company will ever make money, though. That's the problem, because many automakers don't really make money.
Well, Chris, while I have you here, I do want to get your take on what we're seeing in the broader market. Now, this weekend, of course, all eyes were on the French election, and given the expectations, we saw profit taking in both the euro as well as most global bourses. But going forward, we have a lot of headwinds politically. We have South Korea's election as well, and we've had the changing of the guards, so to speak, across the globe. So how do you see that playing out in the medium term?
Well, the markets have been going up because of a shortage of supply. You could say the same thing about the U.S. stock market that you say about residential homes in the U.S. There's a supply problem. All of the activity has been in the bond market. we're going to have record issuance of high-grade debt again this quarter. 2/3 of that's refinancing existing debt that was used to buy back stock. So between share repurchases and the relative dearth of IPOs and other factors, there's not a whole lot going on in the equity market, and yet it keeps going up.
Yep.
In fact, I would imagine that's going to continue. But it's a normalized policy at the Fed. I think it's going to be kind of interesting to see how things fall out, because this economy is not that strong. I've been calling for the 10-year to go back to 2%, which is not exactly, bullish for stocks, but that it is as it is. We've had stocks and bonds correlated for the last 5 years. It's not supposed to be that way. So the question is, when do we go back to normal?
Sure.
And can we?
Well, Chris, since you brought up the Fed as well as normalization, I do want to get your take on what we're seeing from the Fed. As you mentioned, we have been seeing slowing growth here in the U.S., the latest GDP figures, as well as retail numbers that we're seeing are showing a slowing growth here in the U.S. But at the same time, Fed rate hike expectations continue to grow, and Fed fund futures are pricing in a hike for the next meeting in June. So given those expectations, how do you see this playing out for the dollar?
Well, the dollar, I think, is kind of at the top of what I call the super cycle. I wrote a blog about that last week. I think that the Fed is late. They should have started to normalize policy back in 2015 when credit losses in the banking industry had bottomed and the economy was doing okay. But now you're starting to see the end of the credit cycle. Losses are rising, auto loans, bank loans, commercial real estate, all of these asset classes that the Fed inflated with their extraordinary policies. So I think the Fed's late to the party. And my guess is they may get 1 or 2 rate increases in this year, but I think the economy will slow in the second half, and that's going to force the Fed to hold up.
And last but not least, before I let you go, since you mentioned policy, I do want to get your take on the current Trump administration. Now, of course, the markets, investors, Americans, as well as global citizens alike have been paying attention to what's been coming out of the Trump administration, their expectations for tax reform, as well as how healthcare will be regulated going forward. But what do you expect to see this year? If
we get 1 or 2 things done, which is Affordable Care Act and maybe regulatory reform, I would be surprised.
Okay.
Washington doesn't move that fast. There's 3 parties in Washington. You have the House Republicans, the Senate Republicans, and the Democrats. Donald Trump is not a member of either or any of these parties. So he's having to learn on the job, assemble a team, and try and negotiate with 3 factions on Capitol Hill. That's going to take time. You have a fairly conventional Republican administration here, despite the fact that Trump was an independent, obviously, and he's a very intelligent man. So I think just having him in the White House, the change in nuance and emphasis on the part of the regulators is clearly good for the economy, good for business. But I think actually getting stuff passed through Congress is going to be a lot harder than he supposes. And the market's figuring this out. Look, we had a rally. We had Bank of America move 60%. My God, a zombie running that fast. But, that was the expectations that the market had. And now we're starting to see a little bit of a give back on that.
And Chris, you are active on social media. I'm sure you pay attention to Donald Trump's tweets.
Sure.
How closely do you pay attention to them?
When I see them, I read them. He's the president of the United States, but he's entitled to have a Twitter account. I don't think it's right to take it away from him. We want to know what he thinks. The man was elected because of Twitter. He did exactly what Barack Obama did, which was use social media to bypass the existing channels of communication. Did that very effectively. And he knows that the campaign never ends. So that's why you're not going to see him giving up the Twitter handle.
Okay, Chris, well, social media is another innovation that we all take for granted now.
Oh, yes. Well, look, I love Twitter. It's concise.
And we will be featuring this on Twitter as well, so I hope a lot of your readers as well as fans can see you on
I'm sure
social
they will.
media as well.
I appreciate it.
Thank you very much, Chris.
All right, thank you.